all of the stocks is trying. The team is too scattered. I really don't like this kind of vibe. So actually today I don't have much to update because I'm being defensive and I'm not holding any stocks. So for OPCOM it's like this. From the TA side, it just broke out and then we tested this trend line around at 81 cents, 82 cents, and then continue to pump up. So which resistance we are looking at? So these are the resistance that we need to look at is here, around 88 cents to 90 cents. So here are the resistance that need to be stand up above before he can push it up again. So for yesterday, I did mention that he need to stand above 85.5 cents, right? In the chat, in the group chat, I did say that to stand above 0.855 because yesterday 0.855 is the trending price. That's why we need it to stand above it before he can push it up further. So if I think you ask me, I think this stock is potential. Yes, it's potential, but you need to catch at low. This OPCOM you need to catch at low. You cannot catch breakout. If you catch breakout, he will slam you down. From experience, so this stock only can pull back buy and then buy as support. You cannot chase breakout. So if it breaks out and did not retrace, or you cannot find a support, so just don't enter this stock because this stock is not the type of stock that you can chase breakout. You can see there's a lot of long wick. Long wick. Where is it? So you can see a long wick. Almost every candlesticks when he pushed up also have long wicks. So even though they don't have long wicks, the next few days they will drop it down. So like I said, this stock is not for chasing breakout. Chasing breakout, it's for buy as support type of stocks because all of these long wicks, meaning that after you push it up, he will definitely sell down first. Every time it will sell down. So if you chase breakout, the risk is on you. I mean, you're riskier to catch this kind of stock. Okay, you can see past always have a long wick. If you wanted to chase a breakout, always a long wick. So need to be careful on OPCOM. It's potential to break out. It's potential, yes, but you cannot chase breakout. You need to buy at a support. You need to set your stop loss well. If it drops lower, then you cut loss first and then buy at more lower support, buy at a stronger support. For example, right now it's 0.855. Like I said yesterday, he turned a lot at 0.855. So this is the first support that we're looking at. Maybe the next if it breaks this one, maybe the next support we're looking at is 82 cents. And if it breaks 82 cents, the next support we're looking at is maybe around 80 cents. Yeah, 80 cents. And then the last support is at here. That's around 78 cents. This is the layer of support that you need to look at. For OPCOM, buy as support. If it drops like 0.855 is your support, you maybe can buy at 86 cents or at the support. So, but you need to monitor for buying up momentum before you're going in, or not you will just catch a falling knife. So when you have a buying momentum and then you catch the next price, you can let it run, but your stop loss would be strictly at the support lah. So maximum 2 bits of cut loss or 3 bits of cut loss. And if it drops lower, you continue to look at a lower period, lower support. Okay, let me look at SFP tech. Like I said, the IPO stocks. Why did I not enter a position on IPO stocks? Because only LGMS is strong. All of the other IPO stock is weak. I'm not sure why. Maybe because of the US side is still selling. So for SFP tech, what I'm currently looking at is even though LGMS did not sell down below 1.2, which is really strong, but SFP tech already go into almost want to go into red already. So for this SFP tech, I mean, for the other IPO stocks, it's really dependent. Firstly, dependent on the US side. If US suddenly goes up, yes, it will also shoot up. But this need to be careful for SFP tech because a potential head and shoulder, but the neckline is quite far away. You need to break this first. So yeah, need to be careful. The volume is really, really low. Okay, so 1.57 is the place it's turning, and that's the resistance that where he is keep refilling 1.57. So this is the price you need to be wary about. If it rebounded at here, if For example, if you bought 1.45 and then LGMS rebounded, US rebounded, and SFP tech rebounded, so 1.57, if it can't break through, you need to sell at 1.57 or even 1.56. So this is how we look at the resistance. For ECMO, the seller keeps on coming out at 0.69. So I'm not looking at it right now anymore. Not per se for forever. I'm not looking at it right now only because of the US side, and it's still good to look at because it's still holding above this support that I'm looking at. It's still holding above here. I'm still looking forward for head and shoulder, like I said previously, going up. So it's still in my watch list. I'm still watching it, but I'm not rushing in right now because the SFP tech is weak, Synergen is weak, UMC is weak. ECMO has a lot of sellers, hidden sellers. I don't know where do they come from. 69 cents and even 70 cents, a lot. It's blocking. So right now, the only thing we can look at is possibly a GMS. It's really holding quite strong. Like I said, 1.18 and 1.2. 1.18 is the previous resistance that turns support, 1.2 also. So if it can stand strong above 1.2, so later, the next session, it can rebound further, but it might need to depend on the US side first, the futures. And SOLUTN. SOLUTN is actually holding quite well. Where is my SOLUTN? Okay, it's still holding above 20 cents. But because of the glove stocks retracement, which I hope it's really a retracement already, so SOLUTN, the vaccine team did not have any volume because usually is gloves brings up the vaccine sentiment and then the SOLUTN is the leader. Right now, gloves is in a retracement. That's why SOLUTN don't have any, the vaccine team don't have any volume. So it's still potential if it stays above 20 cents. It needs to have some support. He needs to stand above some support before he can continue another push up. If it just drops below, then it's not good. So like I said, 20 cents is one of the support, and then the next one is around 18 cents. So if it drops below 18 cents, then we can see it go back to around 12 cents already, maybe 14 cents or 12 cents. So he need to consolidate above here before he can push another. Because if it sells down below, then all the retailers, maybe the big holders maybe the bigger traders will just sell off, and then the stock will be more fragile, and then nobody's going to support, nobody's going to push it up, then that's the volume is going to get lesser, and then attention is going to get lesser. That's why if it breaks below 18 cents, the attention will get lesser and lesser and lesser, and then eventually it will drop into consolidation again. For Plantation, it dropped because of the FCPO. It's retracing. For this one, what I'm looking at is for possible swing. Like I said, I'm still looking for a possible swing area. So what area I'm looking for swing is, it depends on the FCPO. If FCPO retrace and then it breaks above the resistance, then I will look for a place to entry for swing trade. So I don't know how low it will go, but I'm still waiting for an entry. So for this one, it's a pattern that it needs to stand above this area, 0.95, this support area. TSH is actually quite stable than TH Plan. It's similar to JTSA. TH Plan and JTSA, it's quite stable. It dropped this much because of previous day it rises too much. It rises a lot. That's why it dropped so much. But the volume is quite low. The pullback volume is low, which is a good sign. It's not a bad sign, it's a good sign. But it needs to support above first. Firstly, support above SMA5 and EMA 20, this area. And then before he can push up again, he needs to maybe consolidate here a little while, then push up again. So this is my view on Plantation. I want to see after the selling, and I want to see FCPO if it can stand above the resistance to enter a swing position. So for right now, I'm still waiting for the selling momentum to cool off. Actually not selling volume or selling momentum. The selling volume is actually really low. It's just, I think retailers just cutting loss because of SCPO retracing, dropping, and US side also dropping. And tonight is, I think it's OPEC's meeting. So a lot more of uncertainties right there. And then this Malaysian stock, next Monday is holiday. It's more reason for them to TP. So Plantation, we might need to monitor again. It's not game over yet. I'm still looking at it. It's like just starting engine, like the glove stock is previously it's just starting his engine and then suddenly push up. So for this Plantation, I won't say it's over yet. I'm still looking at it, and I hope it's not over yet because we don't have any team right now. We certainly need some team to keep us going. The election team, I think, is not strong enough for any stocks to play out. I mean, to play out well in the Bursa market. So maybe look at JTSA. Yes, also dropped. Maybe it will go and cover this gap around 55 cents. And even drop to around 53 cents. So if it can stand strong above 0.515, it's still a valid thing to look at because everything will need to retrace before pushing it up. But the candlestick definitely looks weak. It's from TA view, it's a bearish engulfing candle plus this candle. It's really weak. Yeah, because it faces a lot of resistance right here, 61 cents. So this is a huge resistance area right here. So before pumping up again, he will need to retrace first because he racked up 3 days straight, which is with a huge volume, and then retracement with a low volume is good, but not really good. The bad thing is it dropped too much with this volume, but maybe it's just washing out. I'm not sure yet. I need to monitor it again. But the good thing is it's a low volume. Every sell down with a low volume is good. A sell down with a huge volume is not good at all. For this sense of actually, today is really hard to play. I'm not sure why. All of the stocks is trying. The team is too scattered. I really don't like this kind of vibe that the Bursa is giving me. It's too scattered. Here comes 3 bits, there comes 3 bits, and then suddenly here comes another 2 bits, here comes another 4 bits. Can't catch. And if you try to catch it, you will get stuck, and you get stuck, and you just wait to cut loss only. So it's best that we stay out like this kind of market. If it's a market like Monday, Tuesday, Wednesday, Thursday, where they have a clear team, gloves, vaccine, plantations. Yes, you can see me keep on updating. But if it's like today, we just need to learn how to control our G hand because like I said, 1 week, maybe there's only 3 to 4 days we can trade in this kind of bear market. So when the opportunity came, we just catch on to it. But if the opportunity does not come, the team is too scattered, the volume is too low. So we just don't trade it, just don't waste your money on things like this. Just wait for better momentum. Like this, you can train your patience also, and you can train your mentality. You can wait for the chances to come. Hi guys, it's Zach here. If you like my videos and want more contents like this, click like and subscribe to my channel. Thank you and trade well.